This is how I chart out the technical analysis side of my credit spread strategy. First thing we're going to do is we're on the SPY 15-minute chart. We're on the 15-minute chart only. First thing you're going to see is these yellow lines in the middle of my screen. The yellow lines represent the pre-market highs and the pre-market lows of the S&P 500. These are important intraday levels for you to understand. Every pre-market high and pre-market low automatically becomes a level of supply and demand, support and resistance intraday of the day that it's about to trade. The next two lines that you need to draw are very important. This is your opening range line. So you can see the small two red horizontal lines in the middle. That is my opening range. Some refer to it as the orb method, which is the opening range breakout. It's a wonderful and very simple strategy for you to use, and it's how we base this strategy. No one's ever said, okay, but can we orb credit spreads? I'm going to show you how you can and how you can be wildly successful. So you take the two red lines now and you mark out your opening range high and your opening range low. So what we have now is a zone. We have a zone of pre-market and orb, both ranges that will equal a momentum switch. So if we see a breakout to either side, we play the opposite using credit spreads. So let's take a look now. I'm going to zoom out a little bit and you're going to notice my white lines. My white lines are previous highs and previous lows. Doesn't matter how far back you have to go, like this one. I had to go all the way back a few months to find the next previous lows on the S&P 500 here. But these previous highs and these previous lows, these are important levels. And these levels are here for a reason. When the SPY reaches these levels, this is the point where it's either going to break or reject very hard because it's such a far move between these strikes, right? So let's take a look now. This is what our setup looks like. 6 lines on SPY. This is all we need. So we have our pre-market levels charted, check. We have our opening range charted, check. All right. So now we're going to look for the candlestick analysis. This is the important piece that a lot of people don't use in their trading, and this is why they fail. The very basics of options trading. Do you see any indicators on my chart? Do you see anything that I didn't manually just do? No, because I don't want all the noise. I don't want all the bullshit on my chart. I have them blocked off. I don't want to see it. So what we're going to do now on the strategy is we're going to look at the price action on these first 3 candles only. First candle, I noticed that there was no gap, which is great. And it's kind of bearish, right? We see a lot of selling pressure based on the wick at the top. And so right now, if I had to lean after my first candle, I'd say I'm a little bit more bearish. Second candle, we see a newer low, we see a lower high, and we see a kind of break of the opening range, but it rejected. So overall, I'm still bearish, but neutral. Third candle breaks opening range with conviction. There's not a lot of buying pressure at all. Fourth candle is our confirmation candle. This fourth candle right here, this confirms the previous candle. Does it not? Does it not continue the bearish downtrend with lower highs and newer lows? Did it not break opening range and pre-market range? Did it not confirm that this is an aggressive downtrend? Absolutely. So at this time, yesterday, I would enter the opposite. Remember, a call side credit spread is bearish. So if I believe the stock market's going down, I want to be on the call side. So at this time, I entered call side credit spreads at the 411, 413 mark. Now, if we take a look at the intraday price action, it did reverse and we went back up into the range. Then I was able to open an iron condor, which I'll explain to you in another video. Let's stick to this strategy for the credit spreads. This is unbelievable. So then we downtrended for the rest of the day. And by, I believe it was about 130, 145, I was able to take 100% profits. I wind up just letting the credit spreads expire, completely worthless, 100% gains for me. So that's how you do it. That's the basics of how I could break it down for you on how to chart it out and how to play it. Making sure your lines are tight, right? You set up your pre-market lines, you set up your opening range lines, you set up your lower lows and higher highs, and you set up your stop loss and your entry criteria lines. And once you have those and you've double checked the levels, like, yes, this was the previous high of a few days ago. Yes, this was the previous low. Once you literally have those lines on the chart, you're done. The credit spread strategy is on the 15-minute chart only. Ignore everything else. We only follow one time frame, and that's 15-minute candlestick price action.